recording. Thank you so much. And I share my screen. And if you can see my screen and hear me clearly, please give me a thumbs up in the chat box or in the video, whatever way. Thank you. So I hope the screen is visible and my slide changer is working as well. So guys, may I request you to please switch on your camera, a healthy audience. And of course, it really doesn't make any sense to talk to a wall. I know some of you may be traveling from your clinic to home, maybe multitasking, working alongside your clinic. But having said that, if we are here for a purpose, let's fulfill the purpose. I'm sure your branch is more adept in knowing the timings, what are suitable. You can say Punjab and Kerala have a deep connection. They say the Kerala people start speaking Punjabi after 8 and Punjabi people start speaking English after 8. So anyways, Kerala is the most literate. Anyways, jokes apart. So let's come to the agenda. So just a second. Yeah. So all my presentations always begin with thanking the Lord Almighty who's given me much more than what I deserve. And when it comes to finance, of course, there can be no words to thank my dad, who has been instrumental in teaching me the clinical part of finance. Of course, my MBA finance is, you can say, big stepping stone in that. But whatever you'll be learning today, majority of that I have learned from my dad. So thank you, Dad. Miss you always. This is his birthday month going on. He just had a mini day of education last Saturday when we had 3 back-to-back finance webinars. So I shared the Facebook link with my community also. Of course, the Zoom link was for you guys only. So this is my brief CV. I think no need to spend time on it. Dr. Aparna has already detailed you about it. So let's move on to the topic for today, webinar on financial management. I really feel appreciated, you can say, or I really appreciate those branches who are actually, you can say, valuing time much more, because I'm known for starting things on time. And I was glad that I came across like-minded people in Idea Palakkad who are also keen on starting things on time. So today we'll be discussing a lot many things. But before we go on that journey, a few rules for all of you. Please switch on your cameras, come on screen. It is very difficult to talk to a wall. The rest is your choice. Now, finish what all are started now, because initiative is not going to give you results. Finitiative surely is going to give you results. And of course, you can take snapshots, you can take screenshots, or whatever you feel like you can take it. But make sure we all need to realize that sometimes when we take screenshots or snapshots, our phone is learning, our laptop is learning, we are not learning. Very rarely we open up those images once the webinar or the session gets over. So you can take it, but preferably make notes. You'll get a lot of golden nuggets today. And of course, it's courtesy Dr. Subodh and team that you are getting one topic, which I believe I've never taken online. It was a mix of we can say, a few things. So I'm trying to take that in a very unique way also today. So do participate fully, not only physically, but mentally also. Don't be engrossed in your patient. You can, if you want to do your patient, you can switch off the webinar. I don't mind that. Then you can watch it again on the Facebook Live. So of course, keep your phone on silent, although I muted you, but let your source of distractions be over. Sit in a distraction-free zone. And of course, parking lot, you may have a lot of questions. I'll be addressing many questions automatically in the webinar itself. But if you still have questions, keep on putting them in the chat box. Keep on putting them in the FB Live, wherever you are there. We have both the things working parallelly. And all the queries which are there in the chat box or in the comment section of the FB Live, all will be answered. Till the last query is answered, I won't go. That is my promise to you. So anything comes to your mind, don't immediately ask. Anyways, I've muted you all. So right in the parking lot or the chat box, all questions will be answered before we close. Of course, even if you are in Zoom room or FB Live, all queries will be resolved for sure. Now, it's time to start. So what exactly is the agenda for today? Dr. Subodh said, kindly give us a few things on financial management, all those things. Now I said, what all your branch needs to learn. So he gave me a list of topics. There were about 15, 16 topics. I said, Subodh, this is going to take 1.5 days, not 2 hours or practically 1 hour 45 minutes. We keep the last 15 minutes for the questions only. So what exactly? So then he sent me a lot of 6, 7, 8 questions. Said, okay, sir, at least address these. So what I have done is I am answering your questions only, all 23, 24 of them. And of course, I'm not just answering them, I'm elaborating the concepts wherever need be according to the situation, because these are the things which are going to come handy. And as I said, this is the first time I'm doing such a thing for someone. I'm used to doing these things in the pain point series, which I take every year. But even there, the explanation of the concepts is not beyond a few slides. Here you will get a lot many slides, even in the question, you can say, associated aspect itself. So financial management webinar in the form of common questions of every average clinician. So please hang on. Let's start and set the ball rolling with the first question. So managing payment register. Now, this is one aspect we need to very, very clearly understand, that if you're following presumptive way of taxation. Now, what is presumptive? What is taxation? What is conventional? What is OTR? What is NTR? Old tax regime, new tax regime? I'll explain everything. Don't worry about that. But whatever I can, but just try to listen to the flow of the program, because I have designed certain things in a certain sequence as per the audience need. So whether you are following presumptive or conventional, the first thing you need by default is the flow of income. How did you get the money in the clinic? The record of that. And there is a specific format which has been given by Income Tax Department, which is known as Form 3C. I'm going to give you a few variants of that, how I do things, how they want it, how I, you can say, modified that, how I further modified that, how you can further modify that. I'll give you all. So you are not required to show your expenses if you are following presumptive way. Now, presumptive taxation is, it was introduced in year 2017. When many professionals claim that doctors, architects, lawyers, or self-employed professionals, they claim that we face a lot of issues because we don't have as much expenses or as much, you can say, books to be maintained like a businessman. So why are we subject to that kind of ITRs? So late Mr. Arun Jaitley, the honorable past finance minister, he actually simplified the system and introduced, there was already a presumptive section for traders. So he modified that section. That section was 44AD. So he modified that section, introduced 44ADA, American Dental Association, not American Dental, but it is just to explain you what it spells out, 44ADA. And that is the presumptive section for professionals. Now, what does that section say? Whether or not you maintain bills, you maintain books of accounts or not, your expenses will be presumed at 50%, which means you don't need to maintain any bills, but you need to mandatorily maintain your input or inflow of income. Now, this is one aspect which differentiates presumptive and conventional. In conventional, you have the income, you have the actual bills, and thereby you calculate the profit, you maintain the books of account, you maintain the bills, and you file the return automatically. Which idea to follow? I'll be covering that in today. Don't worry. All the questions will be covered. So this is the broad difference between presumptive and conventional. Now you will ask, my profit is not 50%. I may have more or less. On an average, every clinic has a profit margin of 45 to 55, which means, or the expenses are in the range of 45 to 55, average 50. Give or take 5% here and there. Yes, if it is more or less, then you need to. If the profit is less, then there is a leaking bucket in your clinic. There is a Titanic which is sinking. So you need to plug that gap or seal that, you can say, loophole, or you can say plaster that bucket which is sealing or leaking from your clinic. Now, this is one thing. Input source is common for conventional, for OTR, for NTR, for presumptive, which is Form 3C. It's not just convenient to maintain, it is mandatory for all of us to maintain. Any system we are following, Form 3C. Now, what is Form 3C? Let us see. This is Form 3C. You can take a snapshot, no issues on that. So date, serial number, patient's name, nature of services rendered, fee received, date of receipt. This is what the government asks us to have. Now, technically, you will ask, there are many things. You can say, I use a software. My software has an entry system. My software will have the patient input payment. Even if you have a software, you need to remember financial records are different from patient treatment records. Patient record keeping, you can do anything. That is for the DCI purpose. But for income tax department, you need to maintain Form 3C format for input of your clinic transactions. Period. End of debate. Nothing else. You maintaining in software, good. Maintain here also. You maintaining here, you are not maintaining in software, perfectly all right. You maintaining both places, wonderful world to have. But you are making your work difficult by doing it at two places. Now, you can use a variant of the Form 3C, which I'm showing in the next picture. I'll show you one or two variants. You had date, serial number, patient number, nature of professional service, fee received, and date of receipt. You already had columns from A to F. Now, what I've added is G and H here. E-receipt number, manual collating. What is that? Let me go to the next slide. Okay. I'll come to that. So this is one way. This is one way of, you can say, answering the question that what exactly we need to maintain the payment register wise. Of course, the next part is answered in the variant in the second question. So this is the modified Form 3C where I added G and H column. Okay. Now I move on to the second question. How to record the transactions done by patient? UPI, debit card, credit card, cash, NEFT, RTGS, any QR code, any mode, or even the POS machine, swipe machine. Many of you may be having that. So there are multiple ways via which you can record. The way is same Form 3C. We don't have different ways for that. Again, the modified Form 3C I showed you. Now I'm going to show you a variant of that. You got Form 3C, you know it already. This is the variant I showed you. A to F was already there. Just go back. A to F, A, B, C, D, E, F. F was already till, you can say till the date of receipt was there. Till F column. Added G and H only. E-receipt number, manual collating. Okay. Now the variant. Now the variant. After H. I, cash. J, QR code. K, online mode, NEFT, RTGS. L, swipe amount. M, swipe received. This is one way of doing it. Just add a few more columns. I'll be showing you the entry system also, how to do the entries. Now, this is another variant where I added these things before. You can say I've just switched those columns from I to M at the place of G. Just moved I to M from G to L. Just, you can say e-receipt and manual collating are gone ahead. Okay. So this is one way of doing it. Manual collating, I'll be coming to that. Don't worry. What is manual collating? I'll explain once I explain the entries. Okay. So this is one way of doing it. You can do again. I showed you that you can move it. You can move it here. You can keep it left. You can keep it right. Your choice. Again, this is same thing. Just move the columns on this side, e-receipt. You can play with the column, whichever suits you finally. Now, why I show this kind of a system? See the entries now. Just try to understand what you can see. If you can see on the first line, I'll just use my pointer. Saturday, 1st April. The first thing is we work from April to March. That is our financial year, is our year. See. Serial number 1, 1st April, it was a Saturday. ABC, patient name ABC, procedure done RCT, fee received 3,000. It was cash. Next columns are hyphen, 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 hyphen. Date of receipt, 1 April, e-receipt number E1, total 3,000 cumulative total, add in another column, cumulative total 3,000. Go to the second patient, DEF extraction 2,000. He paid 1,000 cash. He paid through one QR code 1,000. Sometimes we have patients paying you double way also. I'll pay some in the QR code or some in cash and some in other way or the digital way. So there you introduce two receipt numbers. Same patient, next patient GHI procedure scaling profile access, just a random thing I'm used. Or you can say names and procedures are just, you can say just to explain you. Don't go into the name part or even the price part. So 2,000, he didn't pay cash, he didn't pay QR code, he didn't pay, he swiped in your POS machine. Now we have a system in our clinic where we say we charge 2.25% extra. Because our merchant charges, our merchant deposit rate is 1.8. 1.8 plus 18% GST, it comes out to 2.23 something. So we swiped it and next day we received 2,002 in the account. Now this patient says, I don't really need a electronic receipt. I need a manual receipt. In my clinic, the system follower is totally digital. We may or may not issue receipt to anyone, but the receipt numbers are generated. So that even if I'm in June, somebody got a treatment done from me in April, needs a receipt, we already have that receipt and we'll print it out from the system. Now this patient says, I need a manual receipt. So even the manual receipt start fresh from the April month. E4, M1. The M1 was the number of receipt. For example, the receipt number is 101 or M1, you can say, whatever the number. M1 corresponds to E4. Write it on there where you are doing it. Manual collating is correlation of the two receipt books. Okay. So this is the way. The above is the same, only I've just given a, you can say, it might not have been fully visible. So I just explained, you can say, elaborated the text a little bit on the downside. The up and the down are the same slides only or the same text only. So clear so far? Then, and your payment register doesn't need to have your clinic records. You may have had 10 patients in that day of 1st April, but only those who pay are entered in Form 3C. You don't enter all the patients. That is for your practice management software or your daily record register or entry system, whatever you are doing. Okay. So again, for example, Sunday is working. Normally we don't work on Sunday, but just to give a demo. Sunday, 2nd April, patient number JKL, denture advance 3,000 rupees. He paid cash, E5 generated. Surgical extraction, he paid through NEFT mode, E6 generated. But he also said, I need a manual receipt. So M2, sorry, it is wrongly printed M1, M2 corresponding to E6. That is the way things go. So again, PQR patient, he swiped this amount, we received this amount. Now, how to enter this amount? It is a personal choice. Some enter full amount, swiped amount. We enter only the received amount. The patient may get a receipt for the whole, but we mention if we are mentioning total. For example, if we are entering this amount, we will mention rupees 76 as bank charges or rupees 43 here as bank charges. So this is the way you enter your multiple system to make it a clear way for having the system of payment receipt. Now, when you consolidate it at the end of the month, this is the way things look like. Cash collection, for example, 1,20,000, QR code 50,000, NEFT 20,000, swiped amount 51125, received amount 50039, total e-receipts E1 to E98, manual receipts M1 to M2. Similarly, for May, 58,077, 35, 4603, 45036, and the total has been made for the month also, and the cumulative total has been made for the year also. That so far in 2 months, I have earned 4,50,000 rupees, for example, just to give you a demo. Clear so far? Anything you need to ask, please post in the chat box. Of course, if it is rated, I'll take it up. If it has to be rated in the next query, I'll rate in that. I'll go through it once again for all of you to understand. You just need to add a few columns, extra columns, whichever way. left or right, suitability as per you. I added here because I have the receipt number at the end. Now, this also saves you from one big headache. That one big headache is, please issue me a bill in the back date. Sorry, not possible, sir. Our receipts are generated for changing one, for issuing one back date. We have to change the whole system, which is not possible. Easily, straight away refuse the patient showing the records. Because many times we have to face this situation that we have to give, or you can say we are asked for backdate bills, false bills, or patient has actually got the treatment done, but he says, issue me it in the March. Sorry, the receipts are generated, the cash is collated with the account, we can't do it. But all this is possible if you are doing these things in white. If you're concealing your income, then this record does not make any sense to all of you, or those of you who are not following it. If you're doing it in white, if you're reporting your income actually, then this is applying to you. If not, absolutely your choice. This is the way you consolidate at the end, and the yearly figure is also consolidated. This is the way you get to a figure where you know how much are you earning actually. So you are not entering all your patients, only your payment paying patients, or those who are paid in the day. You, for example, on Saturday, you didn't have 3 patients. You may have 10, 12, 15 patients, 20 patients, but only 3 paid. So you enter only 3 in the payment record. For your practice memory, you will enter all. Clear? Let's move on to the next. Recording expenses via voucher, cash, UPI account transaction. What to do if no GST bill is present? So the simple voucher, simple Excel file record is good enough. Now that Form 3C can be done manually also. Form 3C I showed you, that can be done manually also in a register. You have a similar column made register available in the market by the name of Register D. D for dog. Register D. Or you can do it in Excel, just like the normal columns I've created in front of. If you use a few formulas, the totals will be automatically done. You don't have to do anything. Automatically done. Cash, issue receipt numbers in the system. I showed you. Issuing receipt numbers in the system is very important. Whether or not you are issuing receipt to every patient, you can issue receipts in your system so that it becomes easy for you to collate it later on. If any patient says, please give me the receipt. Okay, no problem. Just take a printout. And that system is already there. We need to enter just a couple of things and the printout is done with all the things. UPI, same as above, issue receipt numbers in the Excel record. Now, what to do if no GST bill is present? Now, we get healthcare bills with GST like materials, equipments, and from some branded labs as well. The question is, whether you receive bill or not, you can't charge GST from your patients. Healthcare is exempted from GST. Secondly, even if you go in for a GST number, you can't claim a GST input credit also for the materials that you buy for your expenses. So I always say, expenses or no expenses, how to go about certain task expenses. I'll be dealing with that in the later questions. All of that part is covered. I always believe presumptive is better as it presumes everything at 50% bill or no bill. As simple and as easy. What are the further advantages of presumptive? I'll be explaining you, don't worry. So this was the, you can say, in a way where you issue the receipts and the systems against each kind of a thing. The same slide, I've just placed it here for easy reference. Just a little bit of concise version where you understand that how is this going to help you. Now, question number 4, heading of expenses and how to segregate bills. Lab bills, medicine purchase bills, material purchase bills, stationaries and miscellaneous bills, petrol and fuel or other bills. How do you go about that task? Now, this is all done when you are making a balance sheet. Of course, balance sheet is absolutely necessary if you are carrying forward certain things, carrying forward losses, carrying forward profits. If you are dealing with, you can say, want a bank loan, if you're applying for a visa, you need a balance sheet. They'll ask for your balance sheet and your ITR. Now, ITR 4 has been made simplified where Not everything from balance sheet is required to be filled in, but if you make a balance sheet, that is a better option. So what all can be the categories? I'll be showing you a few. So categories can be as many as you want. Make sure that your categories of clinic expenses are pertaining to clinic only. Just a few days back, one of my group members, WhatsApp community, which I'm running since 5.5 years, which you all will also get an invitation to join if you want at the end of the session. So ask me this thing. Can I put in car service charges? Can I put in car maintenance charges? Can I put in car fuel charges, petrol charges? I said, there is a limit to what you can put. First, before I answer you, please let me know how far is your clinic from your house. Is it a walking distance? So how do you do? So I walk to my clinic. So then you are not using car for your commuting from clinic to home. In that case, please avoid adding such kind of charges. Tomorrow, God forbid, you get a love letter from income tax department. Then you are answerable for all this. Your address is this, your clinic is this far. Where did you're putting personal expenses of your car for your you can say clinic expenses. So all these things that you asked, you can say the list can be plus or minus. I'm giving you the list. These all can be the list. You can take a snapshot of this. Lab charges, medicine and dental items, water sewerage charges, pertaining to clinic, of course, not your residence. Municipal taxes, property tax, we have that in Punjab. Electricity charges, clinic confectionery, for example, clinic pantry, if you are having your in-house pantry or making tea and you can say ordering something for your staff every now and then, or even something you have in store for your, you can say staff members for urgent needs, internet expenses, cell phone expenses. If you have an exclusive cell phone for your clinic, you entitled to claim full expenses for it. But if your phone is the one which is used, your personal number is used both for your clinic and both for your residence, ideally, please put in 50% of the charges. I mean the cell phone bill. Ideally, put in 50%. Don't put in full charges. That is what ethics says. Printing and stationery, state development tax, some call it a professional tax also, newspapers for clinic, website maintenance charges, pollution control board charges, bank charges, updation of knowledge, attending seminars, conferences pertaining to dentistry, clinic maintenance, assistant salary, miscellaneous expenses like a maid coming for cleansing, ID annual subscription, Zoom charges, if you are using something for online for clinic education purpose, books if you bought for your clinic mali salary, clinic chair repair, PC of the clinic or the laptop repair, travel and stay if pertaining to conference only attended for updation of knowledge. And then lastly, depreciation of fixed assets. So this can be a few categories. This is not the be it all or the end of all. This is to give you an idea what all can be maximally covered. Mostly everything would fall under these 26 categories only. You can add plus or minus. It's not that you have to add all these 26. You can do plus or minus as per your choice. Absolutely okay. Question 5. How to record salary by cash or account transfer? Again, by using modified form 3C and issuing a receipt number to each and every transaction. I've given already above. You can say posting again in the next slide. Form 3C and the modified version. Thereby you collect your salary, collect your income, inflow, whatever it is. If the question was pertaining to salary of the assistant or salary of the associate, that has been dealt further in the question, if I didn't get it correct, but I've dealt with that part in the later coming questions. So then question number 6, is it mandatory to have a current account? I will say there is an emotional answer or a logical answer. We all know we have two halves of brain. The left brain is the logical, mathematical brain. The right brain is the storytelling, emotional, you can say soft brain, you can say. So I would say no and yes. The simple thing is the IT Act was, the Finance Act was amended last year, 2021. The amount you can deposit in your savings account is limited at 10 lakhs. Beyond that, there will be reporting. Now, that has to be revealed to the revenue system, internal revenue system of the IT department. So for the current account, the limit is 50 lakhs. Now, the question is, why it is mandatory to have a current account, why it is mandatory to not to have a current account? Logical and emotional answer. So the simple answer is, if your cash count, if your counter is more, counter means if your collection is more, and you don't want to keep it in your house or in your clinic, so you will have to make a deposit every now and then, especially if you have cash. If it is digital, it is already going in your account. So if you have a cash collection which is on the higher side, then you need to frequently deposit it. Once if you're going to deposit it again and again in saving bank account, there are two reasons you have to be very cautious. The number one reason, it is already mentioned, the capping of 10 lakhs annually. It is not monthly. Whenever we say a number, whenever we say a figure in finance, it means annually. The second reason, the main reason is, most of the saving bank accounts these days, ever since 2017 or 18, have capped their IBTs at 4 or 5. What is IBT? In branch transactions. What does that mean? You go to a bank, deposit, withdraw through a check or a deposit slip. You deposit through a deposit slip, withdraw through a check. Those are counted as your IBTs. You may go to a bank and make an NEFT, although you should make it online. But let's suppose you have problem with your passport or whatever, you make a request and go in for a NEFT or RTGS, or you make a, you can say, withdrawal from your ATM. Both those are not counted as IBTs. IBTs are what you do at the cash counter, withdrawal and deposit. NEFT, whatever you can do, not counted. ATM, as per your limit. Normally, all banks have an ATM limit of 4 to 5 per month. Beyond that, we don't need also. But that is not counted in IBTs. So 4 to 5 IBT means you can deposit and withdraw total 4 to 5 times a month. Which means you have to deposit once a week. So if you can hold that money for 7 days, 6 days, and deposit it every Monday, every Tuesday, or whatever day you wish to, you can go ahead. But if not, if you're making, you can say, deposit every alternate day, then your IBTs are going to increase. In that case, it makes sense to have a current account. That is the reason current account is very important. Clear? Clear so far? Give me a thumbs up. Does it make sense? Okay. So if, of course, in clinic name, in my name, that is a question which has been asked later also. So I've addressed it over there. So it is mandatory to have, it is not mandatory. It is wise to have a clinic account if you have more of cash collection, so that you don't exceed your IBTs and pay unnecessary charges to your bank. Simple answer. So lessons from above, simply speaking, is if you have multiple input sources, especially more of digital, for presumptive, you need to maintain only Form 3C. And limit of presumptive is 50 lakhs only, below 50 lakhs. But for this current financial year, it has been introduced in the budget that if 95% of your receipts are digital, this presumptive limit is going to go up to 75 lakhs for you. Now, this is to encourage more of digital so that you have less of cash deposit. Anyways, even a Golgappa wala or a Sabji wala has a Paytm or a QR code. So you don't need to even think of what exactly you need to do in that regard. So this was the, you can say, update in the budget 2023. We apply to 44 ADA. The limit was 50 lakhs. Now it has been raised to 75 lakhs. But the condition is 95% of receipts should be digital or through any online mode. QR code, swipe, NEFT, RTGS, whatever mode. Not cash. 5% only cash. Now, what are the further advantages? We'll come to that, don't worry. Now, I hope this is clear in terms of current account and your, you can say, receipt purpose and your income purpose. Clear so far? Give me a thumbs up if you're clear. Okay. Of course, if there are any questions pertaining to that, you can post in the chat. I'll be taking the all other. If not posted in chat, I'll be still giving you time to ask questions in the end. Don't worry. So question number 7, things to be taken care to sell medicine in the clinic. Now, there are two different aspects. You're dispensing your own written medicines in clinic or selling medicines as such like a drugstore. There are two different things. For dispensing up to 20 lakhs per year, 20 lakhs is a huge amount. 20 lakhs per year, you don't need any formality. Any formality. Just, you can say, add it up, give the receipt to the patient and dispense your own written medicines. But for selling medicines, you need a drug license and a host of other formalities to be done in your clinic. The answer is very much clear. Why get an extra headache? Extra staff, procurement, batching, storing, billing, packing, managing expiry, etc., etc. People like to think that it is an extra source of income. Yes, it may be, but it comes at a price. Recently, only one of my group participants was asking me in the Pain Point series on Saturday only, which we had. He said, I am running a drugstore. I'm having it in loss only since 4 years. I'm transferring my clinic income to offset some profits from here. And we're trying to show it break-even part. Why are you giving yourself a pain? The simple question is, you have good patients. Why do you need to venture into this kind of selling? Of course, you can still dispense. I'm not against it. But if there are less patients, anyways, your footfall is less. Your stock will get expired. Why do you need to have an extra headache and still have no income? As the example I gave. So it doesn't make sense to me. Still can have, you can say, your own dispensing, but for a drugstore, I would say avoid. Rather than focus your time and energy on building up your clinic, getting those things in order where you can have more revenue sources from your clinic via more marketing, more selling of, you can say, different procedures, you can say learning those techniques where you can amplify your clinic resources. Now, filling or filing income tax returns. What exactly? You can say there are multiple ways for a normal clinician with clinic income. Another income like, for example, interest income, dividend income, bonds income, rental income, any income along with clinic income except capital loss or gain. Now, capital loss or gain means either from property, which is a capital asset, or capital instruments like shares or mutual funds. If you are having many sources of income except property and mutual fund, yes, sold. Now, property rental income is added here only. Unless you sell a property, unless you sell a share and mutual fund or a share, you don't have a capital loss or gain. Buying is not counted in it. Selling, because selling will give you loss or gain. Okay. If you're salaried, that you are not having clinic, there are multiple ways. If you're having salary plus clinic, morning you go to a job in the college or in the hospital, evening you have your own clinic, there are options. Let me give you out all the options. Firstly, understand what it is. For individuals, we are concerned with 1, 2, 3, and 4. Ignore 5 and 6. That are for companies. 1, 2, 3, and 4. Now you're having you are having income only from salary, less than 50 lakhs, file ITR 1. Salary above 50 lakhs or capital gains, means you sold something. Even income less than 50 lakhs, still have capital gains, ITR 2. I'll come to ITR 4 first. Presumptive taxation, ITR 4. The easiest and simplest ITR, fillable in less than 10 minutes. If you have that sheet, modified form 3 sheet I showed you. If you have your clinic income lined up, this is my cash income, this is my NEFT income, this is my QR code income, this is my swipe income, POS income. If you have all those lists, it takes 10 minutes to file the ITR. Now, if you have salary plus clinic, both the things, Means you're working in college and hospital and having clinic, ITR 3. But even ITR 3 can be filed in presumptive mode and conventional mode both. That is the beauty. Okay. So only salary, ITR 1 and 2. Only professional, ITR 4. A mix, ITR 3. Easy. Now see the chart. If you're salaried only with capital gains and losses, without capital gains or losses, that no selling in property, no selling in mutual fund, ITR 1 and 4. You can file 4 also. Now 4 has been modified since 2 years. You can file 4 also. Salaried with capital gains, ITR 2. I told you already. ITR 2 is capital gains. The second thing is there. If you can see, this is there. Salaried and clinic, told you already, ITR 3. Salaried and clinic with capital gains, again ITR 3. OTR and NTR, old tax regime and you can say new tax regime are possible in each option. Each of the option can give you apply. You can say OTR is old tax regime, NTR is new tax regime. In old tax regime, you get to have all the deductions, section 80 deductions. That is one of the questions that has been asked in today. I'll be dealing with that in the upcoming questions. So in OTR, you get to have exemptions. NTR, which was made the default in this January budget, 2023 budget, it aims at having no deduction, but having a comparatively lesser value of tax to be paid. Now, what is that? I'll come to that when I explain that. So ITR 1, simply speaking, is if you have salary, one house property, other houses, agricultural income up to 5,000. ITR 2, if gains or losses with job but no clinic. 3, but clinic in evening with job. ITR 4, less than 50 lakh income for professional or presumptive will. So another chart for clinicians. Now clinician only without capital gain or losses and following presumptive, ITR 4. Simple, easy peasy. Now from this year, less than 75 lakhs, but 95% digital receipt or digital source of income, ITR 4. Clinician only without capital gains, but following presumptive, but 95% digital, less than 75, but ITR 4 with audit. Following conventional with or without capital gains, ITR 3. Salaried and clinic, ITR 3. Again, OTR and NTR are possible in each of the options. It may look difficult to you, but of course, you need to understand fully things. So, F&O business income, suppose I have professional income and F&O business income, can I show presumptive for both in ITR 3? You can show presumptive F&O business income. F&O is, I mean, you are future and options. If it is pertaining to market, it is not a business income. It'll be still considered under the capital gains or losses. So you need to have presumptive for your clinic, but for capital, you'll have a separate chart schedules, a CG to be filled in. You can't show presumptive for your F&O. That is for sure. What about clinic income plus interest from fixed deposit and rent from other asset? That was the first slide, my dear. Oh, what's her name? My dear Dr. Anil Throli. That was the first slide. Let me go back. Let me just go back. That was the first slide. If you're multitasking, you will miss a few things. See, the first question, the first line was, if you have other income, any other income like interest income, dividend income, bond, rental, any income except capital loss, then you can have normal ITR. That will be counted in other sources of income. So count it in there. That is why I said, sit in a distraction-free zone. Don't multitask. You will miss out a few things. Everything is covered in a sequence. I hope you get your answer. So, yeah. So again, ITR 3 criteria, profits or gains. You can say you can file ITR 3. ITR 4, simple. Only clinic income and other sources of income except capital gains. Any other source of income plus clinic income except capital gains or market linked income or property linked income Those incomes come by selling, not by buying. If you're buying, there is no income. You rather have paid money. So if you have sold anything out of asset, capital asset means property or your shares or your mutual funds or F&O income, that is to be counted under capital gains or losses. If you have losses, if you have gains, that you know, but you can't file ITR 4 then. You have to file ITR 3. So bottom line, just to, you can say, summarize once again to make easy things for you. If salaried alone less than 50 lakhs and no capital gains, I've written gains just for simplifying. Gains means capital gains here. Capital gains or losses. ITR 1 or 4. If salaried alone less than 50 and no gains, preferably ITR 4. I've given you my preference also. If salaried and gains, either of the two, if salary is more than 50 or you have gains, ITR 2. If salaried plus clinic, less than 50 and no gains, ITR 3 or 4. Again, ITR 3 can be filed in presumptive mode. Okay. If salary plus clinic, you can file ITR 4 also in that sense. But if it is more than 50 lakhs, then ITR 3. So that is the limit. Of course, I believe these limits are also going to change because that was a few announcement in budget of 75 lakhs only to presumptive. I guess it will be applicable to all other things also as and when the new forms are uploaded, because right now the previous year filing is going on with the delayed fees also. So at this moment, it is not clear. Okay. So I've explained this already. Salary plus clinic, ITR 3 if you have gains. If you have higher expenses, you can go in for audited returns. Audit means your CA will audit the things and make, you can say, a stamp on his behalf that he's filing on your behalf. Again, this year 75 can be taken presumptive if your receipts are 95% digital. I hope it is clear to everyone. I've tried to simplify and summarize in whatever easiest possible way. Of course, I do understand those who are listening to these things for the first time, it may not be easy for them. That is the reason I took up the form of the questions only to explain you a few things in the concept form. This whole is a 2 to 3 day workshop, which I do. So now the question is presumptive tax or conventional tax. Now, the first thing is both are OTR, by the way. Of course, you can have NTR also in both, and NTR is going to be the default. Now, people ask me, why do I prefer presumptive? I've given my preference, prefer ITR 4. Why do I prefer presumptive? I'll anyway do that because it gives me freedom from maintaining my bills. You don't issue me a bill. For example, you are a trader. You are a, you can say, a supplier. I make you say, sir, bill denge, GST lagega, whatever. If I give you bill, there will be GST, there will be carriage cost, whatever. Okay, no problem. Send me. I'm going to pay you online. Don't pay me this way. Pay me in that account. It is his problem. You are paying digitally. It is recorded as your expense. Anyways, it is not going to matter because your expenses are presumed at 50%. We maintain our bills and accounts to make sure that actually do we fall near 50% or not. As I said before, all our clinics have an average of 45 to 55 expenses. Somebody who's having less needs to really leak, you can say, plug those leaking buckets. So this is just to make sure that you're close to that number. You get freedom from having any bills. I don't need it. You get a freedom from your CA. I told you just 10 minutes. You have that numbers I showed you in Form 3C. You have those numbers of income. 10 minutes to file your ITR 4. Easiest ITR. If I'm following presumptive way, as I said, easiest ITR, I get a freedom from filing difficult, complex ITRs. Easy way, anyone can do it. It is a DIY. Do it yourself. The biggest, maintaining books of accounts, all those vouchers, registers, everything for expenses, for files. I don't need anything. I get a freedom from maintaining that. You have to maintain your books of account for 6 years from the last filed return. 6 years. IT department changed it last year to 3, then again rolled it back to 6. 6 years you maintain all those records. Go to your CA, bhar do meri return, please file my return. Maintain all those bills, file complex returns. All for what? 5% more profit? Bullshit. Sorry for my language, but bullshit approach. If it gives you freedom from all this, and you still don't want to prefer presumptive, with added now advantage of going up to 75 lakhs, any day I'll prefer presumptive. It requires my patients to pay me more digitally. Anyways, we are not concealing anything. So it makes sense to show more in white and have peace of mind when you sleep in the night. Who can file ITR for? Anyone having income up to 50 lakhs, one house property, other sources, income up to 50 lakhs. Simple answer. Most of us fall in the range of 5 to 50 lakhs only. Now 50 lakhs means 4,16,000 gross. Very few of us actually earn 4 lakh plus gross. Yes, I'm not saying we don't earn it. Many of us earn it, but only few of us earn it actually or show it actually. 4 lakh is a huge amount per month. If we're having that, why not have a peace of mind? 4 lakhs means 48 lakhs, or 4 lakh 16 means almost close to 49999, 49 lakh 99,999. Up to 50 is exempt, of course. Not exempt means that is allowable under ITR for in present way. If you continue to follow the way that my parents are not going to change, they still pay me more cash, then you get a limit of 50 lakhs. If you change your patients to pay you more digitally and 95% of your patients pay digital, you get a limit of up to 75 lakhs. What else? 50 lakhs of income means automatically 25 lakhs is gone. 25 lakhs is gone. 25 lakhs is your expenses which have been presumed by the government of India or the income tax department. 25 lakhs of expenses. In actual, if somebody is earning 50 lakhs, trust me, his annual expenses won't be more than 20. The government is giving you a cushion of 5 lakhs more. 25. If now the question is OTR or NTR. Now, if you go in with the NTR, you may have comparatively lesser tax to pay, but you are not allowed any deductions. What are deductions? We'll come to that. But if you're following OTR, the old tax regime, you're allowed all the deductions. For example, 1.5 in PPF, 50,000 in National Pension Scheme, NPS, 25,000 medical insurance. Your parents also have a policy. You take a policy for them, 25,000 for them, 80 TTA. So approximately 2,42,000, 2,40,000, 50,000, 60,000 approximately exemptions are there. Approximate. That are deducted from 25. Let's say 3 lakhs. So you pay tax on 22 lakhs only. Fair enough. Now, what is the problem? What will be the tax which you are going to pay? That is the biggest headache for many. If you are having an income of 22 lakhs net after deductions, people will feel that I had 50 lakhs, 30% means 15 lakhs will go to government of India, 1.5. 15 lakhs will go to government of India. I am not ready to pay tax. Now, if you are actually having 22 lakhs of income, you pay 12 lakh into 30%, 3 lakh 60 and 1 lakh 12, 4 lakh and 72,000 of tax. Earning 50 lakhs and paying 4 lakh 72,000 tax. Is it more? The choice is yours. The choice is yours. In NTR, you may have lesser tax to pay. Probably you might pay up, then you don't get any deductions. There, the calculation is based on your 25 lakhs only. Unless you're salaried, you get a couple of allowances or standard deduction. But for a self-employed like us, you won't get any deductions to be applied on your 25 lakhs. Just presume the same example I presume. So once you are doing that, you're paying a little lesser tax, probably in the range of 4 lakh something. Again, but what is the compromise that you're making? The compromise you're making is on your future. You are not saving anything for your future. You're spending and living in current. That's absolutely your choice. I don't have any issues with that. A variant of the question that I said, that I'm already answering or already answered. Again, emotional or logical answer. I gave you the logical answer. Now the emotional part. It is very painful to beg in front of your kids for at the time of your retired life. If you're ready to do that, please go ahead with the NTR. If you're not ready to do that and create your own corpus yourself, we have a lack of social security in our country. It is high time that any government realizes this thing. At least the taxpayers need to get a social security. They are the ones who are feeding the country. And people believe GST is paid by everyone. I'll tell you budget 22, not this year, last year. Budget 22 numbers. Only 3 to 4 crore people out of 150 crore pay taxes. Can anybody assume how much is the contribution of direct versus indirect? Can you make a guess? 3 to 4 crore, 6 to 7 ITR, 6 to 7 crore, the ITR file, so many zero tax, so many you can say nil, so many getting 87A rebate. Ultimately, 2.5 to maybe 3 to 4 crore people paying tax. But GST is paid by everyone, 150 crore, except the infants, of course. But infants also are, you can say, for their food, their parents buy. Any beggar who is seeking alms at a temple or a gurdwara or a mosque, he gets a, you can say, alm of 10 rupees. He goes and buys a biscuit packet. He is also paying GST. So GST is practically paid by 150 crore and income tax is paid by 3 to 4 crore people. Can you guess the contribution of each to the economy or the government's coffers? Put it in the chat box. How much do you presume? How much you can say direct taxes, income tax contributes? You can say, for example, 2030 or 2080, 3070, like that, 3565, whatever number you want to. Put it out in the chat box. I'm waiting for you. Let's see how many are awake. Let's see how many are awake. Put in. Waiting. All the FB guys, you also need to put in. 1 to 150. Wow. Raghunath Palakkad says 1 to 150. Anyone else? Not sure. Rohit on FB says 20%. Okay. What else? So many people watching. Make a guess. 5%. 5 and 95. Okay. Good guess. 1090 on FB I get from Anurupa. 1090. Anyone else wants to make a guess? 85 to 15. Man, that is too unfair, Dr. Anwar. 3 to 4 people again, 150 and say 85, 15. Man, that is too unfair. That is too unfair on the direct taxes. You can say so many are not doing it. 1%. Okay, let me just answer it for you. So the answer is, as per budget 22, it was close to 50-50, which was a shocker for me also. The direct taxes are equivalent to this. What message does it send to you? If the government gives social security to at least taxpayers, more people will start paying tax. Nobody bothers. But then if you want your future to be secure, you need to have investments done. Government is not going to feed you. You need to, har savari apne saman ki khud zimmedar hai. Everybody needs to make an arrangement for themselves. That line is written in the bus, na? So deductions like ATC, question number 10. Deductions like you can say ATC, ATCCD, ATD, ATE, ATDA, ATEV, ATA. Let me just give you the table for more clarity. Okay. So this is the granddaddy ATC, investment in PPF, life insurance premium, children's tuition fee, ULIPs, ELSS, 5-year deposit scheme, senior citizen scheme, all combined maximum limit of 1.5. Now ATC has subsets also. Subsets like AT-CCC, AT-CCC-CD1. I'll show you another variant also. So all combined 1.5. Then AT-CCD-1B is NPS, National Pension Scheme, or Atal Pension Yojana. 50,000 additional over and above that, 1.5. ATTDA, Saving Bank Interest, ATTDB for senior citizens for all kinds of interest, and of course, ATGG. Now, this is another way of looking at it. ATC includes LIC, PPF, Sukanya, mutual funds, FD, children tuition fee. Now, whatever fee you pay for your children, that is also counted under one. You can count it under 150. But remember, whatever you pay in total as the monthly school fee, or multiply by 12 or multiply by 6, normally we pay for 2 months. A portion of that fee is only tuition fee. Amalgamation fund, building fund, ye fund, wo fund, all of that. Only tuition fee is exempt. Of course, you don't need to look at it in that sense. You need to make sure that you have these things in the mind. ATCCD, investment in pension funds, again a subset of ATC. ATCCD1, again NPS if employers are contributing. Additional contributional is 50,000 ATCCD1B, the one you can see here. This is additional 50,000 over and above 1,50,000. Then section 80D mainly, medical expenditure, medical insurance. Individuals are allowed up to 25,000 if they are below 60. If your parents are above 60, you can get it up to 50,000 for them. If you are below 60, your parents are below 60, very, very few individuals would be there out of all of us. Then 25 plus 25. The second scenario, you are below 60, your parents are above 60. Most common scenario for most of us, 25 plus 50, 75,000. Again, a rare case scenario, you are above 60, your parents are also above 60, up to 1 lakh, 50 plus 50. That is the exemption that is allowed. Again, ATDD is medical disability, a specific disease under ATDDB, interest on higher education ATE, housing loan ATEE, interest is again, can say ATEEA under certain conditions, electric vehicle loan ATEB. If you make donation, if you're a good Samaritan, ATG, you can say you get 50% or 100% depending upon the agency you have. You can say you have made your donation, house rent paid, contribution to political parties, individual or company's contribution, royalties on patents, authors. If somebody of you is an author, you can get it under ATQQB. I'm getting that royalty for sure. So ATTTA is on saving bank accounts, ATU is for disability individuals. So these are a few of deductions, but these are applicable only in the old tax regime. New tax regime offers nil of these. The government says, don't save for your future, don't invest for your future, live in present, spend, make the economy boom via your expenditure. That has been the thought behind NTR. Okay, how to avail, calculate depreciation, wear and tear in clinic assets. Now, consumables are added in full. Consumable means we had a list of expenses. All the materials, medicines, dental items, whatever, any bills to be paid, electricity, telephone expenses, any chair repair, all those are consumables kind of things. They're added in expenses. But if you buy any equipment, it is not considered as an expense. It is only a portion of that, what we call as the wear and tear value of that is considered as an expense. So each year we deduct a portion of that cost. For example, you bought an RVG for 1 lakh rupees. You bought it in the first half. Now, when we say first half, I mentioned, of course, the cutoff date is there. I'll give you that. But let's presume first half means April to September. You bought it. You get 15% deduction for it. which means you add 15,000 of that in your expenses, not 1 lakh. That 1 lakh goes into your capital account. In your expenses side, only 15,000 means you have actually, you can say, kind of a rent for that, or a wear down value for that. You can say wear and tear value for that, whatever you want to. So assets are always capitalized, which means they have a life, 6 to 7 years. And that expense that we charge each year is called as depreciation. Just to simplify, just presume once again, let's presume 1 lakh, let's presume 10% depreciation. Although medical equipment have 15%, just for the ease of simplicity of understanding, presume it at 10%. 1 lakh, 10%, you bought it in the first half, you get a depreciation of 10%. You buy in the second half, you get a depreciation of half for that year. Let's presume you bought it in the first half. You get depreciation of 10%, and which means 1 lakh minus 10,000. Now the equipment is worth 90,000 in your books. 10,000 is added into your expenses. Next year, you again get a depreciation of that on 10% on 90,000, not on 1 lakh. 90,000 minus 10%, another 9,000 you add in next year to that for the RBG. Now your equipment is valid at 90 minus 9, 81,000 rupees. Clear? Next year, you again have a depreciation of 10%. You get a depreciation of 8,100, which now means your equipment is valued at 72,900 rupees, or let's say 73,000 rupees. You add 8,100 in your expenses. This is the way the depreciation goes on decreasing the value of the asset for the next 6 to 7 to 8 years. This is known as depreciation. Now, there are different slabs for it: 5, 10, 15, 40, 60. Again, it is easier to tell it verbally, but difficult to explain it when you have to calculate it. So all dental equipments, medical equipments would have a written down value of approximately 15% unless specified otherwise. All furniture and fixtures and fittings come at 10%. All electrical fixtures come at 15%. Electrical means all your fittings, switches, fans, glow signs, neo sign boards, everything that runs with electricity will have 15%. Your computer and laptop, 40%, your land and building at 5%. This is the view. If you don't find it, just search it on the income tax website, you will find that list. For example, air purifiers, the new things that were introduced in the COVID times. Otherwise also helpful, if not for the COVID. That comes with a depreciation of 15%. No, sorry, 40% only, as per the list, if I remember correctly. So what is the cutoff date? If you buy it before 3rd October, you put full depreciation. If bought after 3rd October, half depreciation. The logic is less than 180 days remaining. September 30th is 182nd day of the year from April. In a leap year, the cutoff, for example, we are currently in the leap year. 2024, February will have 29 days. So this year, the cutoff is 4th October. Even if you buy on 31st March, which is the last day of the year, you will get a half depreciation for that year. Clear? Question number 12, how to register a clinic as charity organization and SME? If you want to register yourself as charitable organization, you will have to create a trust first. Minimum 7 members are needed. Then you need to have a trust deed. Then you have a consent letter of all the trustees. Then you have to register with the state government. But if you're doing all this to save tax, absolutely a wrong choice. Absolutely a wrong choice. Never ever do it. The second question is SME. Go to the government website. The easiest site is udyamregistration.gov.in. Register your clinic as a MSME by Udyam registration, also known as Udyog. Spellings are wrong. It was known as Udyog Aadhaar earlier. Now it is known as Udyam. The only advantage, they mention a huge list of advantages. I'll show you those also. The main advantage is that they only have a loans at a lesser rate. No other advantage. This is the government website, udyamregistration.gov.in. Total process is paperless. Need Aadhaar and PAN. That's it. Nothing much to register for the Udyam. This is my clinic's registration Udyam certificate. Of course, I have blended a few things. This is the kind of certificate you get. My clinic conception date was 1st Jan 2000. So I registered on 28th January 2021. The code you can see, NIC code is 86 human health activities, 8620 medical and dental practice activities, 86202 NIC 5-digit code. So this is the code. If you want to take a picture of the code, you can take it. But as such, there is no advantage for us majorly by registering under MSME. But there is no harm also. If you want to get registered, save that certificate for display. Maybe it comes handy someday. Use it. It is a category B document which may serve as your clinic's proof. Sometimes it's not a category A document, so it may serve as a proof for you. So there is no harm. There are no charges for applying. It is a paperless process. You have to do everything online. So there is no harm if you want to apply, but don't think of any advantages from it. Only Aadhaar number. Of course, after 2021, PAN and GST number is mandatory. We don't have a GST, so we can do using a PAN. So it is a permanent registration and a basic identifier, as I gave you the code. NIC 2-digit, 4-digit, and 5-digit code. You see right at the bottom. NIC industry classification code. Those are the codes. So identification code. So it is paperless based on self-declaration. There is no renewal needed for it. As such, any number of activities can be specified, whatever you do. Along with that, they register you on the government e-marketplace also, which is known as GEM also, or the, you can say, trading platform, TREDS platform. So the government says advantages of credit guarantee, public procurement, government tenders, so many things which are not applicable to us. The only thing is you can become eligible for priority sector lending from banks, maybe helps you. But then I am a banker's son myself. I am against the loans myself. So I will never encourage that. So number 13, investment and saving options. What all are there? So answer lies simply in, I would say, in the simplicity only. 5 bases and 5 basics are to be covered. The 5 bases: term plan insurance, disability insurance, medical insurance, professional indemnity insurance, and an emergency fund. These are the 5 bases you need to keep covered every time. Every time. And the 5 basics: for debt, you need PPF. For balance, you need NPS, National Pension Scheme. For equity, you have equity mutual funds. Hedge, gold in the form of SGB, and HESBA, high earning saving bank account, be it in a private bank account. Of course, private banks only, not nationalized banks. If done properly, these 5 are more than enough. More than enough. Some would say, why not debt mutual funds? Why not hybrid mutual funds, which come by the name of balanced advantage funds? Why not gold ETF at number 4? Why risking your money in private banks? Let me just give you out answers for all these. There is a common saying in market, when it comes to investment, even by the biggest, you can say, investors like Warren Buffett and many others: never put all your eggs in one basket. It is as simple as that. All eggs are not to be put in one basket. If you put in debt mutual fund also, balanced mutual fund also, gold ETF also, equity is already in mutual fund, then all the money is in market. Where are you having the advantage of? You can say different assets in different asset class, or different money in different asset class. Need to understand that part very clearly. Secondly, the aim is that each investment should give you at least 10%. That is the basic inflation that we talk about. PPF gives you 10.1. You will say, no, it gives 7.1. I know. It gives 7.1, but that is tax-free. If you have to compare that with mutual fund, that mutual fund also gives 6.5, 7.5. That is before tax. If you have calculated in the same vein, parameter wise, calculate PPF also in the same vein. Before tax is 10.1, just for a presumption. 10.1 and 30% will give you 7.1. Hybrid national pension scheme, it is anyways giving 11, 12, 13. Equity, we know sky is the limit, 12, 15, 18, 20, depending on your small exposure. Hedge in the form of gold. Gold is a traditionally, you can say, asset which has given returns every time. It is one asset which is an international asset. And when it is in the form of sovereign gold bonds, it is tax-free. PPF is tax-free. Look at those assets which are tax-free. National pension system is 60% tax-free. You're paying tax only on equity mutual funds. Think that to LTCG. Think again. Debt mutual funds are chargeable as per your slab. Same for the balance mutual funds. And then you don't have a security of all eggs in one basket. Which brings me to the number 5 point, HESBA. Now, small finance banks give you high returns. Even for the saving bank account, they give you 7.5, 7.25, 7.15, 7.5 also. Oh, Jeevan changes interest today. 7.5 above 5 lakhs. Some would say private bank is not safe. National bank is safe. I'm sorry. Every bank is safe and unsafe if it is a legitimate son and daughter of RBI. All nationalized and private banks are legitimate sons and daughters of RBI. If you have a 5 lakh coverage in a state bank, you have a 5 lakh coverage in any small finance banks also. The question is not that. The question is, these days banks don't die. They are either merged, acquired, we can say coalesced in the bigger entity. Remember Yes Bank? The fiasco that happened on 5th March 2020, just before the lockdown. They gave a moratorium of 28 days. 16th March, the bank was restored to normalcy in 11 days. Whereas a PMC bank fiasco that happened in November 2019, 4 months before that, that has still not been restored because it is a cooperative bank. And majority, 98 to 97% of cooperative banks are not regulated by RBI. In fact, they are not banks also. They are societies who have named themselves as banks. We talk of banks, there were 23 banks. Now they have been merged by Nirmala ji and made into 20 or 13 or 14 banks. There are another 14, 15 private banks. So practically maybe around 20, 30, 40, 50, 60 nationalized and private banks. But how many are cooperative banks? 1,548 cooperative banks. And those are unregulated. If you want to risk your money in that, your choice. But in any bank which is regulated by RBI, be it a small finance bank, be it a full bank, you are safe. Second thing, a bank like AU Small Finance Bank, it completed its 5 years operation of being a small finance bank in 2021. It never changed its name from small finance to full bank. Either we are happy in that. Getting more business, giving more returns. So think of your emergency fund to be kept in your HESBA in that sense. So which company provides disability insurance? Almost every company. Term plan, when you buy, you can say a portion of that, you can say as a rider, you can buy a disability insurance as well. For a dentist, for anyone, of course, it is important. For a dentist, his hands and legs are more important. Because we work via these only. The skill is in here. So you need to be covered for any kind of fiasco. Can you avail 24B, which enables us for 2 lakh housing loan? Yes, you can. You can. But it is not related to your 50 lakh or ITR 4. It is related to your OTR. NTR, OTR, both possible in ITR 3 or 4 or 1 or 2. The question is, you are following OTR or NTR. If you're following NTR, you will not get a deduction. If you're following OTR, any return, 1, 2, 3, 4, you will get a housing loan deduction. Dr. Dilip, I hope I answered your query. So these 5 are good enough. Good enough in that sense. Now, I'll give you a cycle. How much one should invest? a 0 to 3 years in practice, who will say, I have not much to invest, he should be aiming for at least tax saving. Now I'm talking from the OTR point of view, which is my preferred way. Put in 1.5 lakh in ATC or PPF plus ELSS, equity linked saving schemes, or you can say tax saving mutual funds. ELSS is nothing but tax saving mutual funds. Ratio of 1:2 or 50 plus 1 lakh, or you can say put full in PPF, your choice. Put in definitely in NPS. NPS, anyone above 18 needs to start immediately. Even for your sons and daughters, if you have above 18, please start that. Up to 25K in medical insurance and term plan, 25K of gold, minimum 10% of your portfolio should have gold exposure. And that too, preferably in sovereign gold bonds. And of course, open up a joint account in savings bank account in post office. You'll get an additional deduction of 7,000 for the first holder in a post office joint account. 7,000 on the savings bank account interest over and above your 10,000 of 80 DTA. Just a simple way of calculating. People say, how much is the corpus required if somebody was to, you can say, if somebody was to think in that sense? How much is the corpus required? If you have 2 credit cards, I guess that can be considered as emergency fund instead of blocking your money labeled as emergency fund. I'm not sure you can call that as an emergency fund. That is a debt. That is a debt. And you get only a 50-day period, Dr. Rahul. Never ever count credit card as a, you can say, prized asset. It is finally at the end of the day debt. And to me, it is a banker son is saying you, it is the worst form of debt. Where are you blocking your money? I told you to keep your money in a HESBA, high earning savings bank account, which is giving you 7 lakh, 7.5, 7.25%. 7% plus. Is it blocking your money? 7% is blocking your money. Think about it again. Think about it again. That is why I said, please listen with an open mind. You'll understand. So people ask me how much you should be looking at. Somebody who's starting practice, somebody who is, you can say, in the middle road, somebody who say settled way. If you were to retire today, 5 to 6 years is good enough. Where should that come from? See, if you are putting in 1.5 lakh, 35 years, 7.1 interest, you get a corpus of 2 crores and 26 lakhs just from one asset. NPS, putting in 5,000 per month, annually 60,000 for 25 years. Now NPS you can get as late as up to 75 years of age. Earlier the cutoff was 60 years, 65, 70. Now it is 75 years. You can take that money. For 25 years, you put in 50,000 only or 60,000 only, 5,000 per month. See the corpus. Maturity amount is 2,46,000, 2 crores and 46 lakhs. 2 investments have already given you, previous have given you 226. 470 is already done and dusted out of that 5 and 6. Now, monthly investment of 2 SIPs in 2,000 rupees each. Just 2 SIPs. 2,000 rupees per month. 2 into 2, 4,000 rupees per month. 48,000 rupees annually. The condition is 30 years. All of us can afford at least 4,000 rupees per month. What is the corpus you're going to get? 1 crore and 41 lakhs. What was the previous amount number? 470. 140. 6 crore plus already. 3 investments only. Bare minimum amount. 5,000 a month. 4,000 a month. This 1.5 lakh is practically how much? 12,000 a month. 12,000, 5,000, 4,000. Sorted. The condition is 25 to 30 years. People don't start. Why are they finding things lucrative as more attracting? Is because they lose out on time. They lose out on time. Time is the most valuable asset in finance. We need to understand that. Time lost never comes back in finance. And I've just covered 3, not even talked SGB, not even talked HESBA or anything else. 3 to 10 years in practice. Next aim should be minimum 5 lakhs per year. Middle road. Not try tax savings, try for wealth creation also. Put in 1.5 in ATC, PPF, or you can say mix of that, whatever your choice. NPS, bases and basics covered in 50K. SGB quantity increased to 50K. Open up your account if you have not opened in post office. Now we increase our SIP from 4,000 to 10,000 a month. Time period is same, returns are same. See the corpus, 3.5 CR, just from 10,000 per month. The only thing is discipline for 30 years. Difficult to do. Discipline is definitely difficult to do. We are still lured by cryptocurrencies, F&Os, share market. See, I am not against share market or F&O or whatever. Please understand, it is not, if you are doing those things without proper knowledge, then that is gambling. Pure gambling. If you're relying on hearsay, you're not relying on your own knowledge. Data without analysis is gambling. So don't do into that. Secondly, share market. How many have you seen part-time traders that their market runs from 9:15 to 3:30? If your clinic seriously has a problem, then you indulge in share market in the morning and do practice in the evening. Because it is like this. You're glued to the screen like this. You miss a beat and you lose a few thousands and lakhs sometimes. Never ever, you can say, slap anyone who says that stock market is a part-time profession. Slap him hard. It is a full-time profession. There is no doubt about it. If you have time, if you have the knack, if you're free in the mornings, please go ahead. I'm not against it, but what I'm trying to say and tell to you is that these basics are going to give you enough corpus. The only thing is you require discipline to stick to them. 10 plus years, aim for 10 to 15 lakh. Rohit, I think the screen is okay. Maybe network issue on your side, Rohit, probably, because the screen is visible. You can say to me also on the FB page, I can see it on the screen very, very well in the clear way. So now the wealth creation is the aim for 10, 15 years. Put in PPF, put in, if you have a girl chat, put in Sukanya, put in more in equity, put in more in NPS, put in more in there. Your aim should be to spend 10 to 15 lakhs on your investment. You may get a deduction for 2.5 to 3 lakhs only. But wealth creation comes through tax saving only. NTR doesn't give you this kind of luxury of having the corpus. Now, if you increase your SIP to 17,000 per month, time period interest rate remains same. I've taken interest on the lower side. You get more the returns than this. 6 CR only from one asset class. Sorted. How much was the amount when we calculated debt and equity and everything? Remember? When we were calculating, I put in PPF, I put in NPS, I put in equity. 12,000, 4,000, 5,000, like that, 17, 18, 19,000. We're putting 17 only, getting at almost the same number, which the combined was there. This is the power of having tax-free assets in your portfolio. People run behind share market. No doubt they might give good return. People run behind everything in mutual funds. That is stupidity. That is stupidity. Even in dentistry, you know that. Basics are the key. If you don't do your basics right, you will not get results. It's as simple as that. Question number 14. Women dentist special privilege. Sorry, we are all equal now. I'm not saying it. The government of India says it, the income tax department says it. It used to be there at one point of time. There was an 87-year weight difference. There was a ITR difference, 2.5 lakh exemption, 3 lakh exemption, 3.5 lakh. Something was there long back. Even I don't need to remember when it is not there. So we are all equal as per the law. So no special privileges for you in the Finance Act or Income Tax Act. You are equally at par with men in this area. So how to pay salary to consultant by cash or through account and how to record. Now, all clinic expenses preferably should be digital. Any expense above 10,000 cannot be in cash. And if it is in cash, it won't be permissible as expenses. Tomorrow, if an audit happens, you will have to forego that and count that in your income. Additionally, if you are paying to the consultant, average amount of 21K, this is just for simplifying for you, or above 2.5 lakhs, needs to have TDS deducted at 10%. Now you say, I don't have a TAN number. You don't need a TIN or a TAN number. You just go to the online services TIN website or on your ITD website. Just need a PAN, your PAN number. Of course, if you log in on your ITD website, your PAN number is already there with them. Just fill in the, you can say tax for that, where you have done that. I'll show you the demo. This is the e-services NSDL website, which is now Protean. It has been changed now. So here you can file in your ETDS or ETCS, whatever it is there. Or the other way is normal income tax GOV website. See the option e-pay tax. You can e-pay tax. Just log in through your own PAN number. Go to that section and go to dashboard and e-pay tax. You'll find it in e-file. E-pay tax and pay and deposit your TDS, which means any consultant you are paying above 2.5 lakhs annually, you need to deduct a TDS. Sometimes you won't know at the start of the year. It's okay. If that amount crosses in January, you started in April, if that amount started in January, for example, till December, from April to December in 9 months, you're paid around 2 lakhs. Okay. Now, in January, there was a bigger case. There were many cases. Now the amount is 60,000, which used to be paid in January to the consultant. What is your total now? 2,60,000. Which means you need to pay him 34,000 and deduct 26,000 as his TDS. And that will take care of the every year's. If you're receiving in digital and paying in cash, you're actually increasing your income. So I'm not mandating it, the law mandates it. If you are not following it, if you don't know about it, ignorance is not a bliss, my dear friends. If you don't know it, it does not mean that it does not exist. This is the way you log in, e-file tax. 98% of my clinic payment comes through UPI. How can we manage it to reflect our income? First of all, congratulations. You are eligible for presumptive 75 lakhs category. You are already much above your 95% limit. If your 98% is coming through UPI, perfect. The question is, any UPI payment coming to your bank account is actually your white income. Irrespective of course, I believe if you have a QR code displayed in your clinic, that will be your clinic's income only, your own code only. You can't display your wife's or your kids or your mother's or your father's QR code over there. You will display your own code. So common sense says that the money goes in your account. So income is already reflecting in your account, whether you want to believe it or not. The only thing you do is you need to report it. If you say, मेरे account में आ गया, मैं withdraw कर लूँ, तो मेरी income नहीं है. Entry once there is your income. If 98% is coming, 37.5 lakhs you can presume as expenses out of 75 lakhs. What more do you need? Enjoy the benefits. Reap it. Now, we had a question, current account or not? Now we have another variant. Current account should be in doctor name or separate clinic name. The first thing, doctor's name or your name, it does not matter. Who put it in your head? Your CA. No document on this planet has till date shown it to be mandatory in the clinic's name. And I'm a banker's son who has taught almost big shot, so many big shot CAs of Punjab. My dad. I have had all kinds of accounts. My name, clinic name, you can say partnership name, whatever, different things. Hardly matters. Income tax department doesn't care. We are moving from pillar to post to find what are the documents for our clinic, because the clinic needs to have an existence as an entity or has a KYC. Unfortunately, when it doesn't have it, that is where the problem comes. So what matters is that if you have a current account, if you have more of cash income, you need to. Remember, I told you current account has a 50 lakh limit. Saving bank has a 10 lakh limit in one of the previous queries, number 5 or 4 query, it was there. You remember the IBTs and change reporting clause of 10 lakhs, 4 to 5 IBTs for a saving bank, reporting clause above 10 lakh. So preferably to have a current account, prefer to have it in your name. Easy, simple. Not anything more, not anything less. Whosoever says anything, please give my reference. I have a video separately on current account on this. Tell him to talk to me if he says anything else. How much money can be transferred to savings account from current account without tax deduction? Now, firstly thing you have to presume that if I presume that you're following presumptive, or let's say even conventional, let's suppose your expenses are 50%. So whatever income has come into your current account is your gross. 50% of that is your profit, which is net income. Because 50% has been presumed to be expenses in presumptive. Anyways, as I said, it ranges between 45 to 50 for most of the clinics. Now from that 50% profit, spend 150%, it is your choice. Even the whole amount, whatever amount. But 50% profit, what you have need to pay taxes on that. If following OTR, after deduction of your Section 80 investments, if following NTR, directly without any investments, pay tax on 50%. Whatever you transfer, expense, you can say do expenditure, do personal, income tax department is not bothered with that. You earn 1 lakh, carried home 50,000, you had an expenditure of 60,000 this month, 10,000 from your own savings. Income tax department does not mind. You need to pay tax on 50,000. Just an example. 50,000, there is no tax. I'm not counting that. I'm just trying to explain you. Let's put it the other way. 20 lakhs was your income. 10 lakhs for expenses. 10 lakh is profit. If NTR is there, you need to pay tax on 10 lakhs. If OTR is there, let's suppose 2.5 to 3 lakhs of deductions, you need to pay tax on 7 or 7.5 lakhs. That's it. Easy, simple. Now you spend 8 lakhs, 10 lakhs, 12 lakhs. That is your problem, not income tax department problem. So whatever you can say, have an expenditure, that is your headache. That is where people need to be cautious, because income tax department is monitoring social media of many spenders. They correlate it with the ITR value. People buying a Jaguar or a Land Rover and their ITR value is 10 lakhs. You need to show where the money has come from. Or you buying a 20 lakh car, your ITR value says 5 lakhs. Without loan. These days, TCS is there anyways. They are going to monitor it. Tax collected at source, anything, any car sold above 10 lakhs will have a TCS. You pay something to the government. You need to show it. Where did the money come from? You'll get a love letter from them. Where did the money come from? Number 19, should we start giving tax right now just to file through CA, and how much we can show in a year for minimal tax amount? Or is a chartered accountant mandatory for tax filing, or can we do it ourselves? If you're going the presumptive way, you can file yourself, provided you know your numbers, like the total income or the inflow. Remember Form 3C, I told you, the total sum, cumulative total, it is mandatory anyways. So you know the requisites already, 50 lakhs, 75 lakhs, and conditions which I discussed in the initial queries. If filing conventional way or via audit, then you definitely need a C for maintaining your books of account, for maintaining your ledgers, for maintaining your vouchers, for maintaining your bills. You need a C. You can't do it yourself. Even for ITR 3, I prefer to file it in presumptive mode. If I have to file, if I have tax capital gains, I file ITR 3 in presumptive mode along with capital gains sheet. How to pay staff salary account or by cash? Already discussed, but I'll still divulge. All clinic expenses preferably should be in digital. We do everything in digital. Even a 50, 60 rupee broom, jhadu of the clinic is bought from digital mode. Anything above 10,000 is anyways not permissible as expenses. So it is your choice. Any monthly amount, average 21K or 2.5, as I said, any staff member, you need to deduct a TDS and deposit with the Government of India. I've given you the links already. ITD website, or e-services 10.India website, NSDL website, which is now Protein. You can do it over there. In clinic and office setup, what all bills cover under tax deduction? What all bills cover under tax deduction? Unfortunately, bills are counted under expenses. They don't come under any deduction. I hope you saw the deduction sheet, ATC, ATD, ATD, all those subsets of ATG, ATU, ATGGA, ATGGB, ATGGC, all those things. They are the deductions. Your bills anyways are not. And you don't need a bill also, you just need expense sheet. And expenses come under, you can say bills come under expenses only. I gave a list of that and just says, think expenses are 50%, follow presumptive. Stick to maximum deductions and follow OTR. Think ahead for your retired life. It is painful to beg in front of your kids for your retired life. That is the only reason I give. Keeping medicine stock is profitable. Is it permissible for a dentist to stock medicines? I answered it already. Dispensing may be allowed, but selling as a drugstore is a full-time activity. I would say avoid it. Busy clinicians anyways don't have a time for this. Instead, concentrate more on your clinic and increasing the revenue. For those who are dispensing, many use generic from branded companies which have a good margin, and they further give some discount and add in the treatment cost. Fair enough. Since they are cheaper comparatively, but still you need to take care of the ordering value, the expiry and the wasted part. So don't overstock is what is my advice, even for dispensing your own written medicines. Query number 23, if a lab does not issue a GST bill for a job, how can we make his payment, cash or UPI? GST or no GST does not make a difference. I already addressed that. It doesn't make a difference to us. We are anyways not going to get an input credit for the same. To make all clinic payments in digital mode, most of us have lab bills above 10K every month, which makes it all the more reason to make it digital. By paying cash, we are actually increasing our income. Simply simple. The last question, managing money from the dental clinic. How to manage? The answer lies below in the form of budget. How to do budgeting? The standard rule that is followed all over the world is 50-30-20 rule. 50 goes towards your needs, 30 goes towards your wants, 20 goes towards your retirement goals, financial goals like debt or saving for retirement or whatever. Now, if you have to simplify it, you can use it as a 80-20 rule also, that 20 for your financial goals and 80 for your needs and wants. Now, this is after deducting your clinic expenses. As I said, 45 to 55 or 40 to 55, average carry home is always close to 50% from the gross collection. Suppose you gross 2 lakhs in a month. 1 lakh would be your clinic expenses. Remaining is 1 lakh, presuming at 50%. 50,000 goes towards your needs, 30 goes towards your wants, 20 goes towards your alternate RIP or for your investments or for paying your debts. As a thumb rule, you can say it is said that you need to spend 10% of your gross income. Now, 10% of gross income is to 20,000. That's fine. But doctors, since their economic life cycle is altered, means they start late. An average individual has 40 years of earning, 38 to 40, starting at 28, going up to 62. A doctor starts late, 27, 28. Proper earning starts after 30 sometimes. Neck and back issues finishes early. So we have practically 25 to 30 years, or say close to 30, even a decade less than that. So as a thumb rule, we need 20% of our gross income to be saved. If I have to put that number at 20%, what is that? Answer should be 40,000. So I can't take advantage of the 50-30-20 rule. What is the solution? As I said, as a thumb rule, doctors and dentists should save 20% of their gross income. In this case scenario, 40,000. So what is the solution if you want to save for your retirement throughout your career? Follow the magical Bhavdi formula going by my name. I've devised it as an alternate to 50-30-20 rule. It is 45-15-40 rule for dentists or doctors. Going by the same lines. Take 5 from the needs, 15 from the wants, add it into your financial goals. You can't take much from your needs, but you definitely can take out considerably from your wants. It is around 50%. 40% should go into financial goals. This 40 from net is actually 20 from gross, which is a must. So if you follow this formula, 2 lakhs, same example, 2 lakhs, 1 lakh living expenses, remaining 1 lakh, 45,000 are your necessities, 15,000 are your wants, 40,000 is your investments and saving or any debt if you want to. So technically you have 20% as a thumb rule as well. I know many of you must be like this. Some of you will be like this. Don't worry. My presentations always end with a carry home gyan. So that means you are at the end of today's presentation. As I promised, 1 hour 45 minutes or so. So financial education is not just for wealthy, it is for everyone. Learn how money grows while you are sleeping. Learn it. 10 points which everyone needs to learn. How to save money. How to keep track of money. How to pay what is worth for something. How to spend more money wisely. How to think about money. How to live on a budget. How to invest. How to recognize frauds and scams. How to exercise the entrepreneurial spirit. And how to handle credit. So be financially literate. Start with the basics. Slowly build on that. And always remember, you have to go from step 1 before reaching step 10. Nobody can directly jump on to step 5, 6, 7. You have to go from 1 to 10, which means you go either tax saving mode, increasing tax saving plus wealth creation, and finally wealth creation. The rest is up to you. The rest is up to you. It is a personal choice. Moral of the story is financial literacy is an important skill. Increases your financial resilience, promotes savings, prevents financial errors, reduces anxiety, and of course, cushions the impact of recessions. The key is the key. Key is keep educating yourself. Never call it a destination, always call it a journey. I hope I put you in a critical thinking mode. And if I have, thank you so much for your patient hearing. Before I wind up, just a couple of announcements. We had a launch of this community on Facebook last year, 12th of August, on the day of my 79th birthday of my dad. So this is the community where we offer free education to colleagues, similar to the mode which I have been doing on WhatsApp. Simple way to connect is facebook.com/group/Dr. Bhavdi. Each of my social media is by my name only, Dr. Bhavdi. If you forget the link, go to Facebook and search PhD, plugging the handicaps in dentistry. It is for eradicating the DMF of dentistry, documentation, management, and finance pain points. As I said about WhatsApp, I run this community since January 2018. It is one of its kind, absolutely advertisement-free, pure study-based WhatsApp groups. Till, you can say, more than 5.5 years plus, we have kept it advertisement-free. So much so that even my own paid workshops are not promoted in them. That is the kind of work ethics we have over there. So we had 256 and groups going up to 6. Thankfully, WhatsApp made 5 and 12. Thankfully, now they have made it 1, 0, 2, 3, 2, 4. Now we have, you can say, quelled it into 2. Nearly 2,000 people in the community. So in each, there are 2 different communities. If you wish to be added over there, please feel free to message at this number. This is my clinic's number. And of course, we'll be added very soon. My YouTube channel, Dr. Aparna told you about it. I started 3.5 years back only online. Before that, I was, maybe offline, I'm doing since 29 January 2006. Until date, I've done only 113. But today is my 250th webinar in just 3.5 years. This is the power of online. And of course, all of that is tracked. That channel has 700 videos. For a person who has been camera shy, introvert all his life, 700 is a lot. Short link is bit.ly/Dr. BDS, or again, social media presence DR Bhavdeep. Search on YouTube, you will find it. Do go and subscribe to the channel. You will get videos every week, at least 2 videos every week. Again, social media everywhere, the same. Twitter has now become X, Instagram, Facebook. You will find me on DR Bhavdeep. Standardized marketing, standardized branding everywhere. Please do send me your feedback on your WhatsApp, on the WhatsApp group where you are, the community, IDA Palakkad community, or in my community members who are watching on IDA FB or watching on FB Live, Bookcase and Book Batch, both will be welcome in equal mind. I am always for constructive criticism if you have anything to say. And with this, I stop my share for questions. I have taken up most of the questions in the chat box itself, but for sure, I'm unmuting you all. You can unmute and ask yourself if you have any queries till now. Thank you, Dr. Daniel. So you can switch on your camera, unmute yourself, or those guys who are watching on FB, please put in your questions. All the questions will be answered. As I said, I'm not going to leave till the last query is answered. I've tried myself that I finish the presentation on time within the scheduled time that I was given. Thank you so much. Thank you, Dr. Raghunath. Thank you, Dr. Gururaj, Dr. Manu on FB. Please feel free to ask your questions. I hope I've already answered your question, which you posted in the chat side by side only. Dr. Rahul, I would still say credit card is not a good, you can say, measure to have your emergency fund. Some would say some credit cards offer professional indemnity coverage also. Some would say many things, but there are so many clauses in there. You miss a payment, and some of your coverage goes away. So you don't need to trust those things which are debt instruments. Please think in those regards. So please unmute yourself and ask if there are any questions. Thank you, Dr. Jayapriya. I hope I have addressed each and every question that you guys had. I thought this is the best way to address rather than I put in a topic and then I answer. Not everything was possible in 2 hours. So I've tried to concise and cover whatever I could in these 2 hours or so that you don't get overwhelmed also. And of course, you still have learning also. Is real estate a good investment? Yes, if you are covered with your 5 bases and 5 basics, you can go in for real estate also if you have money to spare. Similar to, you can say, stock exchange. If you have money to spare, time free from clinic, do anything. I'm not against it. But at the cost of the bases and basics, I'm definitely against it. Cover your 5 bases, cover your 5 basics. Uske baad do anything, I don't mind. If you have money to spare, go ahead. Real estate may be a good investment. But the kind of infrastructure development is coming there. You have a plot, you have a good land, and suddenly a flyover comes in front of it. The land value crashes down to 10%. We all have those kind of situations also. So we can't take things for granted, especially when it comes to real estate. But yes, some people will have different choices and different reasons. Thank you, Dr. Paras on FB Live.
So thanks a lot. Now that there are no more chats to be addressed. So it was really a mind-blowing, purely what we say. It was an excellent talk. We were all engaged throughout this 2 hours of this talk. Really, it was really the need of the hour.
Thank you.
So I don't want to, I'll just take all my participants to have a short break. That is a small deviation from the topic today. So to all the dentist colleagues over here, I belong to IDA Palakkad, myself, Dr. Subodh.